of the hundreds of thousands of traders that start trading every year, the majority of those traders start learning about patterns and breakouts. And that gives us a competitive advantage because we know where they look for their trades, which means the big players are also looking to manipulate these levels to transact their orders, and large orders, meaning big moves. This gives us a logical strategy that we can use to get into high risk to reward trades. So in today's video, I'm going to show you how I see the best psychological levels that I trade from. Just a quick announcement and a reminder if you don't know already, we've got the NJAT Trading Missing Pieces series that's going to be out on the 15th of October. That is fundamentals of how to read price action, a really incredible skill to learn. And that's a full step-by-step breakdown on how to read the charts. That's for anyone, whether you're trading our strategy, whether you're not trading our strategy. The information in there is going to benefit everyone. There's going to be information in there that you've never seen or never heard before. So these are the 3 steps to understanding the best levels to trade from. Firstly, we need to understand market structure. As I've always said, there's 3 market structures. We have a trending market, which everyone knows, that's those lows, highs, higher lows, higher highs, and so on, just continues. We also have sideways ranging markets, which everyone hates to trade because they're very choppy, slow, and sideways. And then we also have initiation markets. They come from sideways ranges. They're very aggressive moves in one direction, either a breakout of a sideways range to the upside or breakout of a sideways range to the downside. There's a very clear distinction between all 3 structures, and we do also go through that in our Trading Missing Pieces series. That's going to be a whole section on how to read structure and how to identify it. So that's structure. Once we've identified structure within the market, automatically, as an NJAT trader, you know exactly where you're looking for your highest probability levels in the market. So let's just look from this low that we have here all the way up to current price action. Let's put a line on this area. So this is our starting point. Now, the structure in the market we can very clearly see is sideways. Price is contained between a high point and a low point here before we've broken out to the upside. So this is a sideways ranging market. Now we knew this was a sideways ranging market after price run above this high and we didn't extend in the initiation structure to the upside. So after that's happened, the psychological levels inside a sideways range are always going to be the swing points. On a lower time frame, this is going to be a swing low that we have down here. So psychologically, a lot of traders are going to be looking to either sell this as a breakout. Remember, there's breakout traders. They're going to be seeing all of this price delivery here to the downside. They're going to be wanting to get involved in this move to the downside. And they're going to be saying, well, when price breaks this low, that's going to show that the trend wants to continue. So they're going to be taking a lot of their sells down here once this low has been taken out. And this is why this becomes a very psychological level down here. Because psychological levels are just high volume areas in the market. It's areas where there's a lot of trades happening, there's a lot of volume being transacted in the market. And that sets up fractal highs and fractal lows within the market, which sets up big moves in the opposite direction. So that's from a sideways ranging market, and we can very clearly see when price runs below that low. It's about what happens after price runs below that low. Are we getting strong rejections of lower prices? That could signal that price wants to change its direction here to the upside. Or are we breaking out and we're seeing very strong initiation candles to the downside that are closing very low? That's going to show that price is in a breakout and an initiation, which we'll go through in a second. Now, if we also apply on our framework that we use at NJAT, let's just get rid of this orange line here, and we think about the location of price. Now, this is the highest point to the current lowest point inside this sideways range here. If we apply on our location tool, these are also psychological levels inside the market as well. You'll see when we're in sideways ranges, price will tend to move away from the edges of the sideways ranges, the top 25% and the bottom 25%. And you can see if you were involved anywhere within the middle of this price action, this is where you get taken into a lot of trades and taken out of a lot of trades very quickly. We call this area the slaughterhouse when it's inside the middle of the range. These are the lowest probability trades to get involved in. So if you're taking a lot of your trades here or you're getting taken out of a lot of trades, have a look at where you're getting taken out from. Is it in the middle of a sideways range, or are you trading from the edges or after the psychological points are being taken out? That can actually help you to get into a lot more winning trades and at least understand where you're taking your losses from. So that's a sideways range. The psychological areas inside a sideways range are always going to be the edges, just to recap, and are always going to be after price takes out a swing high or a swing low, depending on the price action when we take out this low. Now, let's go into a different market structure. So this would also naturally be an area that we're looking for here as a psychological level within price. When price comes up into this area, we want to be looking to take shorts here. Why do we want to be looking to take shorts? Well, because this is a psychological level where there's going to be a lot of volumes being transacted above here, and we're moving sideways in a sideways range. We want to be looking at swings and edges inside a sideways range. So naturally, this becomes an area that we potentially look for sells on the lower time frame. Remember, we zoom into the chart. This is a 4-hour chart. This is a higher time frame chart. So we will zoom into maybe a 15-minute or a 1-minute, depending on whether you're using the 15-minute strategy or the 1-minute strategy. And this is where we'll be looking for our pattern to trade this back to the downside. Now, the key characteristics and the differences between price running above this high and the candlesticks we're seeing, and price running below this psychological level that we have down here, is how we've broke through this area. So we can see that coming into this area, we've got some very high closed candles. This is showing aggression and speed to the upside. Now we break out and we see a lot of aggression and speed in this move. We don't see strong rejections. This candle breaks out and we close very high. So now we've changed our market structure. We've gone from sideways range structure here to now initiation structure. This is the second part of RIMC. We get a sideways range first. Always after a sideways range, if we break a high impulsively, we're potentially going to be in a new market structure, which is initiation structure. Again, you'll learn about this section in the RIMC part of Missing Pieces. But these are the clear characteristics that show the difference between a sideways market and an initiation market. Now, where's the psychological levels after we break out of this initiation? Well, a lot of traders will be looking at areas like this, these highs here. And I've recently seen traders saying that this is the mass psychology of the market when price runs above these highs. These are very low probability areas to take trades from, because when we think about an A to a B, which is a swing high to a swing low, the best locations inside an A to B are always going to be the edges. Now, if we look back at this area here, which a lot of traders do look at and say this is a psychological area to take sells from, we can see that we're in the slaughterhouse. These are the lowest probability trades to take. So if you're taking trades in the slaughterhouse, again, just refocus your mind into the psychological areas and the psychological levels, and you'll start to win a lot more of your trades. So when price breaks out here and we're in that initiation structure, we know that price is targeting the next psychological level in the market. Now, where is the next psychological level in the market? It is this high that we have up here. Price is always going to target swing highs and swing lows and equal highs and equal lows. That is the only liquidity that I care about, because that's the only place that the market is going to target. So these become psychological levels where high volume is being transacted and where price is going to target for that high volume area. So naturally, when we break out, the next area that we're looking at is way up here. So now we can trade with confidence into this high that we have up here. Now, if we add on another layer and see where prices come from here to the left as well, if we look over to the left and we see that prices come from a sideways range that's initiated and created a high, and we pull back into that range, and now this is that mitigation continuation phase, that adds another layer of probability onto our trade, because now we have clear direction within the market and a clear target for a psychological level that the price will want to go to. This is how we're combining the concepts to understand the direction and also understand where price wants to target. So as most traders were selling in here, we were looking for buy continuations here to the upside. Now, when price does get into the edge here, like I said, A to B price ranges, A to B, the edges, top 25% or the bottom 25%, these are great sell high locations and buy low locations. Because again, psychologically, traders are going to be wanting to get involved in this trend. So they can see aggression and speed to the upside. They see breaks of highs, which we see here, and they start buying, and that's why we move in the opposite direction. We automatically look at these areas here in the top 25% and we want to be looking for sells, because we know that psychologically traders are going to be wanting to get involved in these areas at high prices, and these become actually great sell high locations to get involved in price. The market is all about psychology. It's all about understanding where the mass psychology of traders are looking at and then we trade in the opposite direction once they look in those areas. This is why it's important to understand how to read price action first, so that we can understand the characteristics and the structure of price, and then we can be involved in the right side of the market. So once price takes out this area here, this high, how have we taken out this high? Remember, this is a psychological level where breakout traders are going to be getting involved in buy trades up here. They're going to see price extending. Remember, this candle hasn't rejected yet. This is going to be an initiation to the upside. Loads of buyers are going to be getting involved here above this high. Breakout traders are going to be getting involved here. Some sellers are going to be getting involved in here. So this becomes a mass psychology area or level that we can look to trade from. Once we see the rejections and we start to see on the lower time frames price moving to the downside, because even though we have a wick here, on the lower time frames, this is going to look like this price delivery here. We might even get some pullbacks and some continuations that we can look to get involved in. But because this is happening, this strong rejection of higher prices is happening after we've taken out the high, which is different to the bullish aggression and speed that we saw out of the sideways range. This is great opportunities to sell price back here to the downside if we're getting continuations on the lower time frame. So now this structure has broken here to the upside. That's showing intention for higher prices. And remember, before we had price coming from this point of mitigation here to the left. So now we can consider this a break of structure and not just a liquidity grab, because the intention is for higher prices, which we've already seen price come from if we look to the left. So now the next area that we want to be looking for our trades between this low point and this high point is always going to be that 50% area, anywhere under the 50% area. The reason we're happy to look for the 50% area is because now price is in trend. We're not in a sideways range, we're now in a trending market. When we're in a trending market, we want to trade at the 50% for continuations. When we're in a sideways ranging market, we want to be looking at the edges and the swings. These are the psychological levels that we can trade from, which puts us on the side of probability. And this is even before going into entries, because once we understand the best areas and the best locations on the chart to trade from, entries become very easy. It's about just seeing a pattern in that direction. So when we go onto a lower time frame, we can see that prices run below equal lows here. Like I said, when price takes out swings and equal lows, that gives us an opportunity to see a new intention coming into the market. So we know that when price has targeted this liquidity here, and we've seen a strong rejection, again, which is really important to understand, strong rejection is showing price doesn't want to continue any lower. Now we can trade with that intention back to the upside. This is an area on the chart where there's a lot of volume. There's a high volume area. High volume areas mean psychological levels. And once we have our trend within the market, this is where we can see liquidity grabs. This is where liquidity grabs make sense, because now once we've seen intention and we've seen liquidity taken out and we've seen a strong rejection, that now counts as liquidity grab instead of a break of structure. Very important to understand that part. And now on the lower time frame, once we've seen this strong rejection of lower prices, remember this candle's still going to be printing on the lower time frame, but because we pull back into discounted pricing, we've taken out liquidity from our mass psychology levels, and we've seen a strong rejection of lower prices, price is telling us a story that it wants to move to the upside. So once it's done that, we can zoom in onto the 1 minute or the 15-minute chart, and we can look for our continuations to the upside into the next mass psychology level, which you guys should already know by now is going to be the swing high that we have up here. So this is the next level that price is going to target here to the upside. We can also see that the market structure changes once we don't get the continuation here to the upside. So we create this low, high, we get that pullback into the 50%, we don't see continuation into the high, so we now know that the market structure has changed and we're now moving sideways. So this is the lowest point to the highest point at that current point. Now we know exactly where we're looking for. The edges, as we always say, the edges are going to be the highest probability locations, because these are the best locations on the chart where the mass psychology are looking to sell from. These are the buy low locations inside a contained sideways range. Now, don't just take our word for it. Look at what's happening on the charts at these levels that we're talking about. Price is turning and changing its direction. So once we have our buy narrative, we know that we're looking at these buy low locations, and we know that price is going to target the next psychological level, which is the highest volume area in the market above this high that we have up here. And this is how we're building the concepts together to build an understanding of where price is targeting and where we want to look to get involved, and also where we want to stay out of the market. We only look at high probability locations, and the whole point of Trading Missing Pieces course is about putting your eyes into the areas on the chart that are the highest probability of you catching winning trades and staying away from the lowest probability locations on the chart. So we teach you how to see both in the Missing Pieces seasons. So now I'm just on the 15-minute chart. This is the chart that I trade. Chuck's always trades the 1-minute chart. I'm always on the 15-minute chart. Now this is our area that we just looked at on the higher time frame. We can see that we came into that edge. What has price done after we've moved away from the edge? We've created a low, a higher low, and we've broken structure here to the upside and created a higher high. So now we're in a bullish trend. So we have continuation structure in the market. All we're going to do now is look to trade our continuation structure into the next psychological level, which we already have marked out, is this swing high up here. So now we wait for our 50% pullback in this A to B. And if you're using the 15-minute strategy, we have a fractal low here, which is a buy order within the market here, followed by a bullish engulfing candle, which is exactly where you'll be looking to buy during the session, which is really important, with a 10 pip stop loss, playing a continuation here to the upside. And that is exactly how we're using psychological levels and how we're using continuation structure in the market to find the highest probability locations to trade from, utilizing our 1-minute and our 15-minute strategies. Thank you guys for watching. If you did learn something in this video, make sure you leave us a comment down in the comment section. Make sure you leave us a like on the video, and we'll catch you guys on the next one.